So the next step in the rent-to-own process is to look at the risk and what are some of the potential problems that you might encounter with the rent-to-own program. So we've put together a list of a couple of the risks that we think that as a renter you would come across. Okay, so we might have missed one, so please do your due diligence. And if there's a risk that we don't mention on this video, please contact us or email us, and we will take a look at the risk and see what stuff we could do to minimize it or to eliminate it altogether. Okay, so the first one is the future value of the property is above the market value. So what that means is, let's say right now we're going to do a rent to own. Okay, so we would right now decide that your future price of the house is going to be, let's say, $200,000. Okay, so at that time in the future, let's say that house is actually only worth 180. Okay, so now the risk there is that now you are locked into a contract to say that you're going to pay $200,000 for this property, but it's actually only worth 180. Okay, so the risk on that is that then when you go to get a mortgage, when they do an appraisal on the property, that's going to come back saying, okay, well, it's only worth 180, so we're only going to lend you up to the 180 mark. So then that means then you need to come up with another $20,000, let's say. Okay, so there's really nothing you could do about that to mitigate it. Just be aware of that. Now, when we set the future price, we negotiate that. Okay, so the one thing that you could do to mitigate that is at the beginning of the contract, when we talk about the rent to own program, is we work on a price that is realistic for the future. Okay, so the second risk is, let's say you are late on your rent or you're late on your top-up rent. Okay, so as part of the rental program, there's the monthly rent that you pay, and that monthly rent goes to the investor so that they can pay off the mortgage or any loans that they've taken out to secure the property. Okay, and then the second type of payment that you make each month is what is called a top-up, and this amount varies depending on where the property is and how much the property is worth. Okay, and it's also dependent on how much of a down payment we want you to get to by the end of the term. Okay, so this second payment that you make on a monthly basis goes to your down payment at the end of the term. So let's say each month your rent is $1,000. Okay, so that $1,000 goes to the investor, and they pay their mortgage, pay whatever interest loans that they have, and then they keep that profit of whatever's left over. Okay, then the second monthly stuff that you pay, which is called the top up, let's say that's $200. So in total, each month you'd be paying $1,200. Okay, so that $200 goes towards your down payment at the end of the term. So let's say for a 2-year term, okay, at the end of the 2-year term, because you've paid $200 each month towards your top up, at the end of the 2-year term, you would actually have $4,800 that would go towards your down payment. On you being late on your rent or on your top up amount is that then you're in default of your contract. So when you're in default, then when it becomes a pattern where you're constantly defaulting and you're not catching up, then the investor can choose to not honor the contract anymore and basically ask you to move out, and then you would lose your down payment, you would lose your top-up amounts that you've paid up until that point, and you would also lose any rent, any utility payments. So all of those fees that you've already paid would be lost. Okay, so keep in mind that the investor does not want to keep this property. Like, our end goal is to, one, help you get into this property, but the investor and myself, we do not want to get this property and have to either try to sell it on our own because you've defaulted on your rent or your top up, and we don't want to have to find another investor because we don't we didn't choose that house that you chose for your family to live in. Okay, so keep that in mind, like this is a risk for us as well. Okay, so now let's say you're on time with your rent, but you're late on your top up. Okay, so the rent amount would go to the investor for their payments and so forth like that. And then when you're late on your top up amount, okay, by the time you go to pay your top up amount, then that amount goes to the investor as a security amount for you being late. Okay, so then that amount does not go towards your top up. So you really don't want to be in the position where you are late. Okay, and keep in mind that when you are late on your top up, the next month when you pay your rent, that rent amount goes towards the top up. So you're always paying that catch up game. Okay, so you always want to make sure that you are on time with your rent and with your top up. And one of the ways to mitigate that is, just to make sure that you pay it on time. But at the beginning of the rent to own program, when we are setting up the amounts, be honest about how much you can really afford. Like, I understand stuff happens in life and things change in life, but at the time when we're making the rent to own program terms, be realistic about how much money you can really pay on rent, how much really you could put on your top up. Because, maybe instead of doing a 2-year term, a 3-year term might be better. Okay. Okay, so the third risk is that during the time of the rent to own program, you're living in the property and there's a major repair. Okay, so this is not ideal. So normally what we would do is at the beginning of the rent to own program, with whatever property you pick, we would do a home inspection. Okay, and so as part of that home inspection, if anything is identified that would require a major repair, let's say the roof, the furnace, are examples of a major repair. If we know that we have to do that within the 2-year time frame, we would probably not finance that property, okay? Or we would adjust the numbers so that that is something that you would take care of, okay? Because as an investor, we don't want to have to pay for a major repair within the 2-year time frame, okay? So with any property as part of the rent to own program, we do have conditions, like the house needs to be in fairly good condition, it needs to be move-in condition, there needs to be municipal sewage systems in place, because if you can imagine, a major repair on a septic system is several $1,000s. Okay, and so we don't want to take the risk that within the 2-year time frame that a risk is that a repair is required. Okay, because from an investor's point of view, if a big major repair comes up and you as the renter can't pay for it, then it falls on the investor to pay for it, and that is something that we don't want to have to do. Okay, so for us, the way we would mitigate that is that as part of a home inspection at the beginning of the term, we would identify any major repairs, and if there is a major repair, then that would be a property that we would say, no, you know what, let's go look for another property. There's got to be another property that wouldn't require a major repair in the 2-year or the 3-year term. The fourth risk is that you're not able to get a mortgage at the end of the term. Okay, and this really would be due to a few things. One is that your credit score is not good, or you don't have the down payment amount that the lender requires. Okay, so the down payment amount, one of the ways that we would get you to have enough down payment for your mortgage is this top up. Okay, so think of it as a forced savings account, because we really do need you to get to 5%, ideally 10 or even 20%. Okay, a credit repair is needed. Okay, so that's one of the reasons why, for whatever reason, you're not able to get a mortgage on your own at this point. And so doing a rent to own program buys you that time so that we can work on your credit repair. So as part of the rent to own program, every applicant must be willing to go through the credit repair program. Okay, so there is of course a cost to that, and depending on how how low your credit score is. Let's say it's in the 500. That's a pretty bad score. Okay, so if your credit score is really, really bad, then we do recommend that you do a 3-year term. And if your credit score, let's say, is in the 600, which is okay, but it's not great, then we might be able to look at a 2-year term. Okay, so we ask that every applicant in the rent-to-own program sign up for our credit repair program. So either you could use our program or you could use an external company. Okay. The credit repair is an absolute must. Okay, if you do not want to do your credit repair, and if you don't want to fix your credit for whatever reason, or you don't think you can, then this rent-to-own program is not for you. Okay, because then at the end of the 2-year or the 3-year term, if you don't fix your credit repair, you're not going to be able to get a mortgage. And any money that you've put down for your down payment, your rent, utility payments, any of those fees and all that stuff would just be lost. Okay, so the credit repair is essential. Like you have to get into that mindset that, okay, in 2 years time, my credit repair is going to be fixed so that I can get a mortgage. Okay, now keep in mind that for lending practices, you need a minimum credit score of, I think, 650 or 680. So there, you have to get to that point. Okay, in order for this rent-to-own program to work, for you to be able to get this house into your own name. Okay, now one of the things that we could do at the end of the, let's say, 2 years or the 3-year term, if you're not able to fix your credit report but you're very, very close to it, is to extend the term of the rent-to-own program contract. Okay, so there is that option. Okay. Let's see, so the fourth risk that we looked at was that you can't get a mortgage. So let's say you go through all the pains of fixing your credit repair, and you've been on time with your rent, you've been on time with your top up, you've paid all your utilities, you know, your taxes are paid up to date, so your property taxes, the insurance, everything is paid up to date, and then at the end of the term, you still can't get a mortgage for whatever reason. Okay. So this now here is where we would, one, either extend your contract on the rent-to-own program and then take a different approach, because it might not be your credit repair issue, but it might be your down payment issue, or something else. Okay, so at that point we would work with you to come up with a plan B. Okay, now keep in mind that getting a mortgage, you might not qualify for a traditional mortgage. So that would be, like, say, with the big banks like CIBC, Scotia, TD, those companies. Okay, so the second option is to look at a B lender. Okay, so there's, you know, I would say 50 different B lenders out there that I'm aware of. Okay, so we would work with one of the B lenders to help you get a mortgage. All else fails, I wouldn't recommend going with a private lender. We might be able to do a private lender, you know, at 6%, and in today's interest rate of, you know, like 2.6, you know, a 6% interest rate seems pretty high. But there was a time period in the late 80s, the early 90s, where the interest rate was 15 to 22%, right? So at that point, then, if the A lender is not a possibility, B lenders won't consider giving you a mortgage, then we would look at doing a private loan. If not, and if that's not something that you want to do, then we would look at extending your rent-to-own contract. Okay. So those are the 4 risks that we could think of in the rent-to-own program for the renter side. Okay. So if we've missed a potential risk, please email us or contact us, and let's keep the communication open. Okay, this rent-to-own program, in order for it to work, needs to benefit both sides. Okay, and so we want to make sure that you getting into the rent-to-own program, that it's going to be a good fit for you. Okay, so thank you very much for watching this short video on risk. Make sure you check out our other video on the introduction to the rent-to-own program, and please also check out our other videos on what fees are involved in the rent-to-own program. Thanks very much.